So when we talk about depositing the taxes, the IRS is just like all of us. The more somebody owes us, the faster we want that money, right? If somebody owes you $1,000, you want that money back pretty quick. If they owe you $10, you can probably wait a little while. So the more you owe the IRS, the quicker you have to deposit these taxes. So remember, that schedule is for reporting, filing the 941. This is a separate schedule for depositing. So let's talk about that. We have several different schedules here that we're dealing with. The most common ones are a monthly deposit or what we call a semi-weekly deposit schedule. But and this, I'm going to kind of go, actually going to use this, not this. I got to go back. Come on. Okay, so if you are an annual depositor, if you owe under $2,500 a year, let me do it this way. You can just make that deposit once a year. That's different than the $1,000. The $1,000 was the reporting. So if it was under $1,000 or under, you can report it once a year. If it's under $2,500, then you don't have to pay it until the end of the year. And that would be due January 31st. Not many people fall under that. You could be a quarterly depositor if you owe under $2,500 a quarter. So this is per year, this is a quarter. So if it's quarterly, it's due with the 941. So that same schedule, you would pay it with that 941. Again, this is under $2,500 a quarter. You may be a monthly depositor. This happens if you owe between, so this gets a little bit tricky because there's some overlap here. This is up to $50,000 a year. And these amounts, by the way, don't include the wages. Now, I'm not talking about wages, amounts that are owed that you paid for wages. I'm talking about taxes. Only the taxes that were withheld and the amount that the employer owes. So these are the things that are totaled to come up with these thresholds. So if you're a monthly depositor, you're not a quarterly depositor, you're not an annual depositor, but it's up to $50,000 a year in these are called payroll taxes, by the way. All combined, those are called payroll taxes because they're withheld from payroll. So you will pay them by the 15th of the following month. And your payments are generally electronic. Like the quarterly, you could write a check and submit it with your 941. If you're a small business and you don't have electronic payment set up, you could do it that way. Annual as well, you can pay it with whatever forms. Monthly, now you're talking bigger numbers. You're going to be paying that through an electronic payment system.
Oh, question.
Yeah.
Is that new? Because I had a business for about 7 years, ended like, I want to say 6 years ago, and I would just do annually, and I was making around $30,000 for my business.
It's not about what you're making.
Oh, okay.
It's about these thresholds are how much did you withhold and how much did the business owe combined in payroll taxes. So if it was just a solo, you didn't owe any of that.
Okay.
Yeah, you didn't have to do that. All right, so again, this is just for what was combined, what was withheld from paychecks and what the company owed for their share of the Social Security and Medicare tax during these periods. So if it's up to $50,000 a year, but under these amounts, then it's due by the 15th of the following month. The next one is called semi-weekly. This one's weird. This is the one that students kind of get tripped up on. Because it doesn't mean that you pay it twice a week. It means that there are 2 days during the week that the IRS receives payments. So that semi-weekly is from the IRS's perspective. And whether you pay it, the two different days are Wednesday or Friday. Whether you pay it on Wednesday or Friday depends on when your payday was. So you pay it on Wednesday if your payday was Wednesday, Thursday, or Friday. So this is the payday. Friday, it'd be all others. So Saturday, Sunday, Monday, or Tuesday. So today's Tuesday. If an employer is on a semi-weekly deposit schedule and they're paying today, that means they're going to have to figure out how much they withheld from employee paychecks today and how much they owe, and they're going to have to deposit that by this Friday. If tomorrow is payday, the first day of the month, then they've got a full week to make that deposit. They will deposit it the following Wednesday. So this is the first Wednesday following these days, the first Friday following these days. What else do I want to say about that? The last schedule is called next day. So this one, I'm sorry, the semi-weekly is from 50,000 and up. So if you owe over the course of a year $50,000, and I'm going to tell you, we'll talk about how they determine that yearly amount. If you owe more than $50,000 during the year, then you're on a semi-weekly deposit schedule. The last one, is called next day. And this applies to any individual pay period where the employer owes, combined all of these taxes, owes over $100,000. So over 100K in a single pay period. It is due by the next day. It'd be the next business day. Again, that still applies. It's the next business day. So for bigger companies like DMAC, I'll use this as an example. So DMAC pays twice a month. Today is payday, and then they got like the 15th of the month is payday. So DMAC has enough employees that they have definitely withheld federal income taxes, Social Security and Medicare taxes, and their share of those Social Security and Medicare taxes, I'm sure well exceed $100,000 because they've got enough employees that would be the case. That means that DMAC, if that is the case, is going to have over $100,000 in those liabilities for this pay period. So they're going to have to make a deposit by the end of tomorrow of all of those taxes. So you can see how the more you owe, the quicker they want their money. Right? Most big businesses would fall under this next day schedule. Now, the next day schedule is special in that it's not a recurring schedule. It only applies to the liability in a single pay period. So you can normally be a semi-weekly depositor, but if you have a single payroll, maybe the end of the year and you paid bonuses, and so you in that single pay period, you owe more than $100,000. In that case, for that pay period, you have to be a next day depositor. You have to deposit that the next business day. But then the following pay period, if you go back to under $100,000, you go back to your regular schedule. So it's entirely possible you could be a monthly scheduled depositor, and then one pay period you have to deposit the next day, but then you go back to being a monthly scheduled depositor because you don't exceed that $100,000. Okay, so these are regular schedules, deposit schedules. This is a one-time deposit schedule, but those big companies where every single pay period they owe more than $100,000, they're going to be next day all the time. This means the payroll department has to keep track of what that deposit schedule is. It's all based on when payday is. When is the payday? Okay? At least for semi-weekly and next day, it's based on when that payday is. For annual, quarterly, and monthly, then it's based on all the paydays in those periods. So how do we determine what schedule we're on? How do we make that determination? Well, I mean, obviously, we look at how much we owed. For the next day, it's going to be whatever it is in this particular pay period. What happens is the IRS looks, they have this, what's called a look-back period. So if you've read your textbook, you've read about this look-back period. They look back at the period between July and June. And they determine then what the schedule is going to be for the following year. So this determination is usually done in November sometime. So for example, if we've got a business, the IRS is going to look back at what our deposits were from July 2024 through June 2025. That's the look back period. If it was under 50,000, but on a quarterly basis, it was over this 2,500, then they're going to say you're a monthly scheduled depositor. They're going to decide. The IRS is going to decide. And businesses get notices to let them know what their deposit schedule is for the upcoming year. So in November this year, businesses will get notices from the IRS for what their schedule is for the following year, for 2026. What else do I want to say about that? Oh, I lost my train of thought. Oh, so if you're a new business, you don't have a look-back period, right? You just start a business today, you don't have a look-back period. What's your schedule? Everybody is automatically started on a monthly schedule. So you start out on a monthly schedule until you have accumulated that look-back period, and then the IRS determines what your schedule is going forward. Okay? So again, different from the reporting schedule. This is the deposit schedule. When do those payments have to be made for all of those taxes that were collected and accrued? Okay? Questions before I let you escape. I still technically have you for 2 minutes, but
okay. The minimum amount that you can make as a self-employed person is how much before you can pay?
$400 is the cutoff.
Okay, that's okay.
Yeah.
So.
And that's net earnings, so minus your expenses.
Okay, I'm thinking from a personal aspect. I never received what you're talking about, like one of those forms. I just paid my income tax every year.
Oh, the
I
W-2?
My business in it, but because I have dependents, do you think think they take that money out.
Well,
of
let's chat about that
Okay, sorry.
individually. That's okay. That's okay. So we'll talk. We'll look at the we'll look at the 941 on Thursday. We'll go through that problem of how to fill that form out. Remember, that's the one that's due on a quarterly basis. Okay.